Ladies and gentlemen, today I'm going to take you along with me to the market and show you exactly how I trade live, starting from the strategy that I use, the step-by-step process I follow each and every single day, how I mark up my key zones, how I place my stop loss, how I identify my take profit levels, the confirmations I want to see. I'm just going to show you everything in this video, so whether it's a win or loss, it's just about me showing you how I approach the market with discipline and then a proper strategy. All right, just stick true to the video, and yeah, let's jump right into it. So the first thing that I want to see is the market condition, all right, which has to do with the trends. Is the market up? Are we trading to the downside, creating lower lows and lower highs, or we are just consolidating like that? This is the first thing that I want to see. If you're on an uptrend, then fine. If the market is trending to the downside, that is okay for me. But if we are consolidating, that is not a market or a pair that I want to trade for the day. All right, what I want to see is a trend. The second thing I identify is the daily bias. I want to know, are we going to go up for the day? Because I'm a day trader, I just want to capitalize on a move for that particular session or that day. So I want to see, are we going to go to the upside today, or the market is going to drop? That is what I want to identify before I'm able to tell that, okay, on the 15 minutes time frame or on the 30 minutes time frame, we're going to get a move to the upside. I want to see what the market is also doing on the higher time frame, right? I want to correlate the higher time frame with the lower time frame. So with that being said, I want to do a top-down analysis. Now let's say this trend is the daily time frame, right? So we have the daily time frame creating lower lows and lower highs, lower lows and lower highs, right? This is a lower low, but if you look at this trend, this previous high, it's not been broken yet, right? We just had a break of structure, so we are still on a downtrend. This move is just a pullback, but mind you, this is the daily time frame, right? So if we're gonna have the daily time frame to pull back all the way to this level before it drops, then are we gonna sit down and wait for the daily time frame to do all this before we trade with a trend? Because what I do pretty much is to trade with a trend, right? I can trade against the trend depending on the time frame. For instance, on this daily time frame, I'm not going to sit down and wait for trend to move all the way to this level before I trade with a trend. No, I'm a day trader. So if this is the case, the very moment I see price doing this, right, I can go on the lower time frame, and this is how the structure is going to look like. It's not going to be the exact thing, but yeah, you're going to see change of character or break of structures to the upside, right? So this move right here is this, and then you're going to see price now breaking highs, which means that the trend has shifted on the lower time frame. We are now on an uptrend on the lower time frame, whereas on the daily time frame, this is just a pullback. So here, as a day trader, I can just capitalize on this move going up, right? So there's a break of structure. I can just wait for a pullback, identify a key level, get an entry right here, confirmation, and then trade this also to the upside for the day. That is something I can pretty much do. When you're on the lower time frame and trading with this trend to the upside, you have to have it at the back of your mind that, hey, yes, we are on an uptrend, but on the higher time frame, this is just a pullback. So we might pull back to an area of value where price will literally just continue trading to the downside. So you have to have that at the back of your mind, right? So that is how I identify my daily bias, using the higher time frame versus the smaller time frame. Another example, now let's just say we already have the daily time frame pulling back like that, right? Which means we have created higher highs and higher lows on lower time frames. This is still a pullback, right? But the fact that I know that the daily time frame has already extended, we have already had a very deep retracement, which means at any point in time, price could just, drop to the downside. If I go on the lot, I will see higher highs and higher lows, but I will just not be willing to keep on buying because I feel like price had already, shot to the upside for too long, right? We are in a zone where price is likely to retrace. So on the lower time frame, the direction might look like, yes, we are still creating high highs and higher lows, let me continue buying. But if you look at the higher time frame, you get to understand that we are in a zone where you don't have to buy, even though we are on an uptrend, but you don't have to be looking for buying opportunities at that level. So with this scenario, what I do is, even though we are creating high highs and high lows, but I'll be waiting for structures to start breaking to the downside, just to indicate that, hey, the uptrend might be over. We are now about to just drop. So yes, the bias might be up, but I will be looking for, selling opportunities because of what I'm seeing on the higher time frames. So these are things that I do in order to identify the direction. The next thing I do after identifying my daily direction is to mark up my key zones. There are various techniques that you can use to mark up key zones. It could be a support or resistance level. So let's say we have a downtrend, right? We have price just creating lower lows and lower highs, and then we see price just pulling back. One thing that you can do is obviously just draw your previous level of support, which could also act as a resistance. So this could be a key zone, right? So support and resistance is 1. 2, trend line could also be a key zone. So you might have price tapping on the trend lines, right? So if you see price approaching a trend line, obviously doesn't mean you should start selling, but this might be a key zone where you have to watch out for what price is doing. The next thing that you can also use is your fair value gaps. You can just identify a zone somewhere here and then expect price to at least react over there. It all comes down to what price does there. You can also mark up other blocks, demand zones, supply zones. These are all key areas in the market where price is likely to react. You can also use the Fibonacci to mark up your key zones, right? So personally, I use just 2 levels. This is my 0.79 and 0.71. This is the level that I like to mark up, right? So this could be an area where I would prefer price to just pull back in. Once we get there, I just want to wait for confirmations here, and then I'll just trade the market to the downside. And lastly, what I want to wait for in that key zone is my confirmation. I have set rules that I follow. If I don't see them, I don't trade. And if I see them, I just execute. Even if it doesn't go my way, it's okay, because I executed exactly what I saw. When it comes to confirmations, personally, I want to trade with a trend. So what that means is I'm not trading a pullback. I just want to wait for price to pull back to my key zone, and then I will just trade with the direction of the market. So what I'm just waiting is basically waiting for a reversal, right, on lower time frame, waiting for this trend to reverse to the downside. So in my key level, there are 3 things I want to see. Number 1, I just want to see price giving me a reversal pattern, right? It could be a double top. The very moment I see this, I'll just wait for a pullback, and then I'll trade this to the downside. Or I want to see a head and shoulder pattern. The very moment I see this in a key zone, this is a head and shoulder pattern for me. I'm just waiting for a pullback, and then I'm trading this to the downside. The last thing that I would like to see also is how price moves in my key zone. I always say whenever I draw a support and resistance zone, or you have a demand zone, you have your fair value gap, whatever zone or key level that you have, it's all about how price approaches that level. There's a rising wedge pattern as well, and with this I can combine it with the divergence, right? There's a video I made on YouTube. You can just go and watch that. There's divergence. That is where I combine price action with RSI. And last but not the least, candlestick confirmation, right? So imagine I'm seeing this structure on the 1 minute or even on the 5 minutes. This whole thing is on the 5 minutes, right? And I get a break right here. There's a break on the 5 minutes. Everything is telling me to sell. And then I go on the 4H. I see a bullish candlestick followed by a bearish engulfing. This is the 4H candle, right? This right here tells me that I should sell. When I go on the 5 minutes, I'm also seeing this structure, so I'm getting double confirmations. Structure has shifted here. Candlestick is also giving me another indication. So these are all the confirmations that I use when it comes to me executing a trade. So I do have my first trade running for the day. I'm just gonna take you back to what I saw before taking the trade. So this Euro USD on the daily time frame, we're on a bullish. This is the low that took out this high, so we are currently pulling back. But since we are gonna day trade, that pullback is literally a whole trend on the lower time frame. On the 4H, we have price just creating lower lows, we're breaking lows. We broke this low, pull back, broke this low, like that. Yesterday we had a massive break to the downside. So we're just gonna follow the trend. On the 4H, yes, this is a very strong impulsive move to the downside. And if you look to my left side right here where I have this is a level that the market respected as resistance, right? We resisted right here. This was also a resistance. And understanding patterns as well, know there's a possible bearish flag, right? So this is when I went on the 15 minutes time frame and I saw this, right? On the 15 minutes time frame, we have price creating higher highs and higher lows, breaking highs and higher lows like that, right? So right here I saw price changing character or breaking below this previous low, which means that price is likely to reverse, right? So after seeing this, I know that anything after that is just a pullback. And then also I had to add my Fibonacci level. So this is a very strong zone that I look at anytime I draw my Fibonacci. So I have the 0.79, 0.71 zone. That is this level. So price pulled back into that level and I saw this engulfing right at that level. That is where I got my entry. So currently I'm just in this trade expecting price to at least break this trend line. Yes, we are even breaking below, and yeah, this is where I'm expecting price to get to, at least reaching the target. That is the 90% rule I normally talk about, right? But even looking at the trend, we could just go all the way to the downside, expecting price to just continue or give us the same exact leg right here, something like that. So we could even just trade all the way to the downside. So this is my first trade, so I'm just gonna chill, enjoy my day, and see how this goes. So we had a pullback at the zone, break of the trend line, break of the structure, pullback, and then a drop, right? Let's check this out on a 5-minute. Yeah, so right here, using the Fibonacci from the high to the low, and you can clearly see that we had price pulling back to the same Fibonacci zone, right? 0.79, 0.71 areas, just as this one from the high to the low pullback. This was our 0.71, 0.79 Fibonacci levels. We had a break of structure, the same pullback at the same level, so this could have been a second entry, yeah. But anyway, the trade is still ongoing. Stop loss is now at break even. We have locked in profit, so there is no way we're gonna lose money on this trade. Perhaps what I can even do is bring stop loss to at least this high, because we've had a break right here, pullback, and then a drop continuation to the downside. Whenever you are placing a stop loss, what I do is I wait for break of structures. For example, if you're on a downtrend, I wait for structure to be broken, and then I place my stop loss right above this. So if I wanna just trail my stop loss, I have to wait for another pullback, break of structure, and then I'll now adjust my stop loss from this level to that level. If it's on an uptrend, it's pretty much the same thing like that. Once we break structure, I put my stop loss just below the previous structure, right? I wait for pullback, break of structure, and then this becomes the new level of stop loss. So that is it on this trade. I'm just gonna chill, wait for this trade to hit my TP levels, if that's gonna be the case, because this is where I'm expecting price to at least get to. This will be my first TP, and let me say this: if we have price hitting TP on the fib levels, so we have price at the negative 27, 0.27. This is my first TP. This will be the second TP on the fib levels, but overall I'm just expecting price to get here. All right, so I'm gonna go ahead, adjust my stop loss maybe somewhere here, and then I'll see how price will play out going forward with this trade. Yeah, this is such a beautiful trade. It played out exactly as I forecasted. We have price almost at the TP. Just how many pips? Just 2 pips. Just 2 pips to the TP. So yeah, I think I'm just gonna go ahead and close this, and then see if I can scale in. If we break below and then we get a pullback. All right, this is the first trade for the day. I don't know if we're gonna get another trade. Wow, this is so crazy. After price getting to our TP level, we had a strong spike to the upside. Boom. So you can see how powerful it is to have an area where you're gonna take profit. Imagine all I was thinking was, okay, you know what, since this is a downtrend, I'm just gonna hold until we go down. No, I'm just gonna close my trade here. That was my exact word. Just gonna close my trade here and wait for a break. If we break and we get a pullback, that is when I'll be looking for a continuation to the downside. So yeah, all in all, it was a very beautiful trade. I'm done with this one. I'm just gonna wait and see if you're gonna get another trade, on another pair, or pretty much just done for the day. Yeah, so I'm just about to go to the gym, just go work out, and the market is just shaping up. I'm not really seeing anything right now apart from the first trade that I took. So I'm just gonna step away from the chart, and just do something else. That is one thing you need to understand as a trader. You don't want to be sitting behind the screen 24/7. That might be, very tempting, because you might be taking every single candlestick you see moving. So yeah, I'm just gonna head to the gym, and this is just my even half price. Just we had a pullback right here, right? This is where we left, and then price is currently dropping. Anyway, it's all good. We are out. So yeah. So guys, what is your takeaway from this video? Personally, what I'm taking away from this video, even by creating, is the fact that you need to have set rules and process that you follow each and every single day, because I believe that is the only way you can track whether you are doing right or wrong, and also following your rules that you have set for the day, or even the rules that you have set around your strategy or your trading in general. If you look at what I did, I told myself, this is where I'm going to place my stop loss. This is where I'm taking my profit, right? I'm only holding it if price breaks below that low and retest. You need to follow those systems and processes, right? Because trust me, the market is not perfect, so once you have a rule in place that, hey, this is what I want to see, this is what I want to do, just do it. You don't need to have any regrets in the market, because a lot of times you see somebody placing TP here, right? Price will get a TP instead of closing. That person will still hold it thinking price will drop more, and then you see price just going back to hit the SL. I mean, you got to be content in the market. What you really have to focus on is your consistency. How consistent do you follow your trading plan? How consistent are you with your strategy? That is the main thing that you have to follow, and I believe the rest will follow. So if you learned something from this video, go ahead and drop it in the comment section. I want to know your takeaway from this video, right? It's Ike the Greatest here. Do well to subscribe, do well to like this video and share, because I'll be dropping this kind of content so that it can actually help you to grow as a trader. All right, it is what it is. I'll see you next time. Peace.